that the quality keeps people waiting for the next information. Thanks a lot. So is the recording on? I suppose yes, with all my confessions. Okay, thank you very much, Katerina. Welcome everybody, welcome to my webinar. Broadcasting live from Mexico City. Today is Thursday, March the 2nd, 2017. This is me, myself, Alberto Alvarado. This is my free YouTube channel. If you haven't subscribed, go there and click, type this in the search box. iiivb Stream Room channel, this shows up and you subscribe. Remember that since I am getting much more active in the contest and in trading, etc., coming back to normal, it won't be surprised. Don't get surprised if I need to update something all of a sudden during webinar hours. So that will be the channel of communication. And remember that link to my YouTube channel is my Google Plus account. That even though you don't have a Google Plus account, you can bookmark it, and then you will have my. It's like the Google's Facebook. Okay. That Katerina says that nobody uses it, and I agree with her. But well, it's very practical to have that YouTube and Google Plus account linked. So let's begin. We don't have a lot of things to talk about, but I want just to review the first day of my trading competitions. The trader contest, well, I am not that bad as last month, of course. I am currently in a loss, floating loss. This is not an actual loss. This is floating. I'm in the 164th place. So this is the first day of competition, and honestly, I am taking all the precautions to avoid margin calls and that kind of stuff. So I shouldn't be having the same problems like last month. And at least my minimal objective for this month is to recover the $100,000 I lost in last month's competition. So in other words, my minimum performance I expect this month is to have a 100% outcome. Of course, my idea is to continue, but if in any case I find some problems in the competition and I just have to choose a target, that should be the target, okay? But well, it's the first day. So actually the trader contest, I have already closed in profit, if I'm not wrong, a short euro-yen trade. I'm going to show you in the charts what happened exactly yesterday, why I am holding still the trades that I am holding there. But well, this is the update on the trader competition. And for the first time in my life, this is a social trading contest. Sorry, this is in Spanish, but it's a social trading contest. Could you believe that I am already in profit? I was trying to figure out a way to start choosing smarter signal providers, etc., and then focus on keeping the profits, etc. And I'm already in 34th place, and this is good because I have never been this high ever, not in the very first day of competition. So I hope. The problem with the social trading contest is that it's demanding me way more energy and time, because while I trade, besides trading all the other contests and trading my live accounts and trading my margin forex account and trading my binary option account, I need to keep an eye on this. Actually, I have this account, this JForex, running in another computer, just to have it constantly watching it. For example, if I dislike a trade, I just close it, etc. So, but well, it has had good results. So let's see what happens in the next days. I was really not expecting anything special of this competition, but well, here are the numbers. So maybe this will be a good one. Hopefully, this could be the first time I am having good performance there. The other one that I am competing is the binary option. And as you can see, oh, here you cannot see it. Let me have another snapshot. Just a second, please. But well, in the meanwhile, as I've been explaining in other webinars, the reasoning behind binary options is, at least the way I understand it, is way different from margin trading. I will try to explain you why in the next minutes. This trade, I opened two trades. One, it was short euro yen and short dollar yen also. But the problem with the binary options is that you need to time it correctly and to put expiration date. My limit on the trading competition, I'm not interested in opening 10. For example, now if you watch the first place in this competition, it already has $30,000 in profit. I mean, that means that this guy opened like 10 trades, and you cannot have more than 5 at one moment. So it's simply, I mean, it can be done, but it's not my interest. My interest is to play it only 2 per day, or maybe 4, 5, but only once. Or if I, let's say, the maximum you can risk is $1,000 per day. You can divide it in 5 or in 2, etc. But the thing is that if you win, since I'm limiting myself to open only trades that will expire at the end of the day, of course I wouldn't have more time to open more trades during the day. And if my both trades are wrong, I incur in a loss. And if my both trades are correct, like in this case, I win. If one is wrong, one is right, I'm pretty much a break even. So honestly, and seeing how the first places in these competitions behave, I really don't think I will get in the first places. But ending this competition in any paid site, in any paid place, would be great, even if it is the last one, because it would have indicated that I am adapting. And since I was explaining that one of my live accounts is binary options, so I really cannot start jumping between platforms, because here I have this limitation, only 5, etc. And if I have to choose between 2 things, or I completely mimic my live account and the contest account exactly the same, or I just decide to open 2 trades per day to expire at the end of the day, and that was the choice I made. So during the trading day, if I find a good entry point that could meet my criteria of in the time that in the day that it remains, that I see potential to be correct, I will open it. And this is what happened yesterday. That is why I have $900 in profit. Is the equivalent of 2 trades open correctly, and I am in 27th place. So let's see what's next. Of course, it's the first day. Maybe I am lucky in all the competitions. So, but this is the usual thing that I will do every day to report the trading results, etc. This one is something that it's like a wish for me. I have tried several times to be in the strategy competition, to build my robot for trading, etc., etc. But for some reasons or other reasons, I found it difficult or no time, etc. So in this case, I just decided to take a shot and to try it. Again, the last time I tried it was August last year, and I won like the 17th place or something like that. But actually, I didn't like the performance of my robot, so I said like, but well, now I am holding in a good position, 23rd with 12% of profits. So well, this I can only modify it once during the competition, but in the meanwhile, the strategy that I am following in this competition is the same that I've been explaining during the webinars. The almighty, super fundamental, super technical bullish trend on dollar yen. So since this needs, and this is why this is called a strategy, because you need to look beyond the day-to-day action, day-to-day price action. You need to really try to look further and analyze deeper into the real movements that prevail during the next month, that will prevail during the next month. Either it's trending or range bound. So I just decided to say, okay, I'm very sure of this. Maybe I am wrong, etc. I have one time to change it, but at least so far it's been performing correctly. So let's see what happens here. Well, the trader contest, I just explained you my position. So I believe it's time to explain the chart. Well, this is my trading contest screenshots. Okay, I have a dollar yen short trade, 5 million at 113.75 more or less. A short trade GEPI, almost 3 million at 140 round. The stop loss here is 140.50, 114.50, and the take profit target is exactly this. Yesterday, I closed my live. If you remember, I was saying that I have a live trade, short trade on dollar yen. I closed it here along with other competition trades here. But the thing is that when I opened the trading contest account, the price was here. So I just put the take profit target again here, betting for that this will be retested, and look what it did. Okay, so I just woke up, I just checked it, I just analyzed the price action, etc. I am still seeing some exhaustion to the upside. I'm going to show you in more detail the chart that is leading me to believe that at least a retest of this level is very possible. The 114 zone has been showing huge resistance, and this has a reason. There are option traders in the big markets, in the American markets, etc., that were betting that, for example, the market won't close above the 114. So that is why there are a lot of volumes entering at this zone. And that, and if I'm not wrong, in the 114.40, it's the big no touch option. So that means that these participants, they usually have deep pockets. What they will try to do is to stop this no matter what. Of course, that doesn't depend on them. It depends on how the market starts structurizing itself every tick. But at every selling opportunity, they are selling big. For example, here. You can see the volume here. And every swing to the downside. As you can see, the movement continues moving up. The volume is starting to pick up again. So it's really tricky to know exactly who's going to win this. When you start usually when we start our trading careers, we believe that there is a secret formula of knowing exactly what the market will do, like if the big guys know it beforehand. The thing is that that's not the reality. The market is being built tick by tick. And if the market continues moving up or down, even if it contradicts the fundamental data, the market will continue doing it. And we need to follow it. Every swing to the upside, every swing to the downside either represents a pullback to continue in the inverse direction, or that maybe it's part of a bearish or bullish movement in progress. So this is something that is built in the lower time frames, and it happens every time. That is why being an intraday trader is also called active trading, because actually you need to actively surveil, not necessarily to trade, but at least to surveil your position. If you are bullish or bearish, and for example, let's put it this way, I am short here, 113.75. Unfortunately, I just missed it, and since the trader competition uh, reduces your qualification if you don't use limit orders to close your positions, I didn't close it here, but I was very tempted. But well, this is the price of this, so that's it. I'm not going to discuss that. So when I started, when I woke up, it was like, I believe it was here. I woke up at 7 p.m. my time, that is 1 a.m. Yes, 1 a.m. more or less here, 1 a.m. GMT time. So I was analyzing the market structure, and overall what's been happening here was telling me that there are a lot of risks of having the price wanting to close below the 114 today. How far? I don't know. But at least those are the risks that, following my analysis, I started seeing, and yes, even this movement to the upside to this stop is still that range. My hard stop loss is 114.50, that's it. Why? Because having this very important reference, the 114 psychological level, fundamental level, option strike price level, etc. And I'm just willing to take a 50 move to the downside. Of course, I'm not going to risk more than 50 pips to the upside. That would be insane. And the other one that I opened some hours ago, it was here, when the market got here to the 140. For the exact same reasons. Actually here, I have a stronger bearish sentiment. So, since usually the GEPI and the dollar yen behaves more or less the same, because both include Japanese yen, and overall because apparently Brexit thing is going to be stocked again, so usually that leads the market to, when you include again uncertainty, maybe you could see weakness to the downside on down. So well, that is why I decided to open this. In this case, my stop loss is at 140.40 because my take profit target is at 139.60. So it's 40 pip potential profit, 40 pip potential loss. That's why I've been saying that I have always preferred to use one-to-one risk reward, because that allows you, for example here, I am betting that this is my hard stop loss, but that doesn't mean that I will start sweating bullets and praying if the market gets here that please this stop loss not to be hit. No, actually I give the market this room to breathe, because if, for example, in 5 hours I see that the market structure is strongly still to the upside, I'm going to close the position. So this is only a seat belt. A seat belt is something that you use it wishing not to make it function, right? But this is the seat belt. If I go to the bathroom, if I fall asleep, whatever, if the market skyrockets, well, at least I know this is my maximum loss. Here is the same stuff. Again, the dollar yen, I see it, or I feel it like more probable to move to the downside. Unfortunately, I didn't close the trade here. That would have put me in the competition like in 17% of profit. But well, I was wishing to, why I didn't close it here? Because it was hitting a psychological resistance. So if at some moment you need to rethink maybe not to close a losing position, in this case to the short side, is when it is hitting a psychological level. Overall, this quality, the 114, and all the market structure, etc. So at some point, the market will need to rally back, to pull back to rally again. So this is what I believe is the market is trying to happen. I've been seeing very interesting price action during the following hours. For example, this one. This movement to the downside, this movement to the downside, and this movement to the downside, when I was analyzing it in the 10-second chart, looked really interesting to me, because I could feel that there was real interest to try to make this price go lower, but it depends on how it plays. I mean, maybe the position is already closed, I don't know. But well, until I am sure after the webinar, I will make another analysis, and if I see that the structure is just to the upside, I will close the trade. I won't wait to have this stop loss hit. I don't think that this will get that ugly, but let's see what happens. Okay. As you can see here, we have this triangle in the gappy in the 5-minute chart that's broken to the upside. This is very granulated. This is the 5 minutes, and we just had this ascending triangle being invalidated because it tried to break the downside, but it tried to respect again this line, but now it's retesting this. So this chart pattern is pretty much invalidated. Why? Because the same thing that I just explained. There's a lot of forces pushing back forward at this level. There are people betting for a breakout, but people wishing to see this price move higher. But again, you have enough forces to short here to try to stop the movement here, all here. And well, the market just got above this, now it's retesting this. So this is what is showing you is that there is confusion in the market, that there, at least at this moment, there is no still clear winner. Of course, if this continues moving up today, I wouldn't rule out that today we could touch the 115. Okay, or even further. Why? Because a lot of people that were shorting here, including all the ones hedging those option trading, maybe will try immediately to compensate the loss that this will cause them. So usually when you have that, you have big movements in the breakout direction. Just don't get greedy, and if it gets to the 114.50, you don't buy here. You need to take the risk beforehand. Either you buy here and you sell here, or you short here and you put your stop loss above. And that's the way it works. So this is the 5-minute chart. You can see I am floating in 40 pip losses here. Unfortunately, I just decided not to use use their market closing here. But well, this is the price to pay. This is not that bad. 11 pip is more than tolerable. It's more than normal. Overall in gappy, that's way too volatile. Okay. And let me launch again the screen sharing. Okay, here it is. And let's go to the 1-hour chart, because I was telling you that I was going to explain you why I believe that the dollar yen could start showing off some weakness. This is the 1-hour chart. This is the 15-minute chart. So this gives you more or less the context of this. So this is again the 5-minute chart, how this looks like at this moment. So let's begin with the 4-hour chart. The 4-hour chart is showing us this falling wedge that we've been discussing that lately. Actually, I just forgot to put a snapshot of my usual trading blog post that I quit posting because my competition was lost last month. But of course, I don't take such decisions before the day 15. So at least you can expect the next 15 days that I post something that I believe that could be useful. You know what? I'm going to have a snapshot there, because I want you to see that before even going to sleep, what I commented here. Here it is. let me focus it better. Give me a second. This is getting slower and slower. Okay. Here it is way better. Here it is. So what I posted, this was like at 8 p.m. GMT time. I said after POTUS's first time addressing to Congress, markets apparently regained confidence that the American economy will continue to be managed likely the same. A lack of details on the supposed super tax reform, missing specifics on immigration, and hard numbers on any potential free trade tweak created optimism that the approach of fixing something that is not broken by POTUS will stay sidelined. Now markets bet for continuation, and that means Fed continuing hiking rates sooner than later. Let's remember that when Donald Trump, before getting into presidency and even after, some of the comments that he gave to the press, to the media, could be understood like if he could be wanting to intervene in some way to push a change in the policy by the Fed. So that put the investors really nervous. But now, apparently that is fading away. That apparently this guy, whether he wants it or not, will have to respect the independence of the Fed. It's the best for everybody to do that. So this way visible on dollar yen thanks to the sum of a strong American economy versus a really disappointing experimental essay trying to revive the Japanese economy. This pair soared after retesting the 112 support level justified by an ascending channel on the 1 week. This Chartist pattern has been explained during other webinar deliveries. That comes from 2010. The risks for the upside remain on the fundamental trend being well built for a quite long time so far now, supported by a recently broken falling wedge in the 1 hour to the upside. Actually, this falling wedge is also in the 4-hour chart. On the other hand, the move starts looking overbought, opening risks to the downside in a pullback form. Okay, this is what I posted before the market, before I went to sleep. Okay, so I commented that I was started seeing overbought, some kind of overbought conditions. When I am saying overbought conditions, I don't mean that this could pull back 200 pips. No, not necessarily. But at least that at some moments at the time it's time for the bears to start taking control of the markets, they could start injecting and selling more dollar than usual. The market moves in waves because it's like if you have every time a turn for bulls and bears. At a time, bulls take control, they leave control to the bears, and the price will get up to the bears, the liquidity and volumes the bears are willing to put in the market, and so on. So that is why it moves in waves. For every swing movement to the upside, you will have a movement to the downside, and then you will have a movement to the upside. What it makes transferred range bound is the magnitude of the volumes injected in such periods of time. So what I am wondering is that at some moment, at one of those moments, the market starts its bearish turn. It's bearish. It's bearish turn. You could expect to see a movement to put it well below the 114, trying to make it close. My idea is that they will try to make it close below the 114 today. So here is a falling wedge in the 4-hour chart. Look where the market is just getting. 114. This price is well surpassed. Okay, so this usually at some moment is attractive for taking money out of the table, profits or losses. Okay. Besides that, we're getting very close to this level that has no technical significance. But when you sum up this plus the psychological resistance plus this, look at this candle. This is a 4-hour candle. From this, we have a pullback here. What I am expecting is that the next pullback in dollar yen should happen more or less here. That is the 113.50, where I am planning to again try to take profit on these trades. The exact level that was retested yesterday. That I didn't close it at this moment because I didn't want to close it manually in the competition. Okay, so this is why I expect the price will try to retest again because it's, in my opinion, overbought. The thing is that under these very special conditions, you can stay overbought for a lot of hours, a lot of days, a lot of weeks. But well, this is why trading is risky, because you need to take a side, to take a risk, make your measurements, gauge your stop losses, etc., and just flow with the moves. If actually we have a retracement, we could have a 113.50 or even a little bit lower. And if we continue moving up, the next step is, I wouldn't be surprised if this price doesn't stop this today to see the 115 being touched. So, in any case, I see that in advance. In the trading competition, I will assume a loss in this trade, but I will immediately revert it, betting for the 115. But I need to analyze the lower time frames. So this is the 1 hour, this is the same falling wedge. As you can see here, the same, the price is getting closer to this non-technical significant level, but I want you to check this. We have, you remember that I was explaining that during this movement, all the volumes in the during 3 stages or 2 in the 1-minute chart, we saw this exact same volume pattern. In the 1 hour chart is clear, okay, but look what happens after this spike. The market broke this, got to the 114, but look, the volumes are just moving in the contrarian direction. So I don't think that any kind of breakout, if you want to call it that way, in these levels until will count as strong if we don't have at least the volumes picking above this level. So that is why I still hold that maybe the buying interest here is not that high anymore. Maybe we will have increasing volumes while we start selling, like in here, for example. That this could happen again. We just tested the 114, the 1 hour during 1 stage, 2 stage, 3 stage. It has been doing higher highs. I dislike in the bearish aspect that the price is getting well above this moving average. I really dislike this. But the overall perception and feeling is that in any case this will continue moving up. This should stabilize here in a manner that will start building a floor in the 114 and then move up. If I detect that, and if actually that happens, at some moment in the 114 I will close the trade and then revert it to the 115. Okay? But this thing of the volumes in the 1 hour chart is the one that is leading me to believe that we could see a movement to downside. Just checking now the market after this sell-off. I want to show you. The most likely thing I believe is that my GAPI trade will get closed in a loss, I believe. This is how things are looking now. As you can see here, after having this, the market is moving back here, now retesting this. So yeah, the volumes, at least in the 5 minutes, are looking very high. So this could mean that there's a huge exchange of price of volumes here. So I need to keep an eye on this in the next hours. And this is how the gappy looks like. My stop loss is at 140.45. So yeah, this is not looking promising at all. I am back, but now I don't know what happened. I believe it was just a network failure. So, well, I was explaining that, well, it depends. So the price is just swinging back again. I'm going to tell you something. If in this occasion the price doesn't manage to get at least again here, the most likely thing is that this will be hit. This, of course, I will have way more time to measure my exit and to revert the trade. So I need to keep an eye on trading. This is how this trading world works. Okay. The thing is that when you really concentrate in tracking, and this is maybe my mistake last month a little bit, that when I saw things so complicated in my live account, I tended, of course, to watch the trades more closer in my live accounts, and not necessarily my trades there are the same in the competition. So maybe I could have avoided the margin calls, etc. In this case, I am focusing a lot of that. So yeah, no matter if you lose, you can recover. If you know what you're doing, you can recover and at least close a month at least at break even. Okay? It could be a very bad month, and then unless you commit a lot of silly mistakes like the ones I committed last month, you wipe out your account. Okay. So this is the 15-minute chart. So this is looking. So this is another reason I believe that this is like a good price to consider selling. We have this double top, 42% of quality. Of course, it's not that big deal. It's in the 15-minute chart. This is a double top already, and it could become a triple top, and then come back and then try again. So, but these are only references. I mean, when you want to hold a losing position, and if you really want to hold it for a reason, you need to have strong evidence to do it. I mean, because if not, what means is that you are having wishful thinking that your trade will become profitable at some moment. Please, no. When you want to hold a position that is losing, here I try to make to pile up evidence that tells me, okay, if you want to keep it, you need to have enough. That is why in the 4 hour, the psychological levels, the resistance levels, the technical level that's usually not considered that I just showed you, that it's replicated in the 1 hour. And in the 15 minute, I have this. So yeah, maybe, I don't know, maybe if you consider seriously this trading pattern, Maybe the stop loss should be like on 114.60. I'm not going to move it. I'm going to leave it in 114.50. Okay, that's it. I'm not going to move my hard stop loss. What I believe is that at least this should make the price at least come back to the 113.90, and then I will start watching closely if the market still has chances to move lower, because I need the price to move up to here. So as you can see, both my stop loss and my take profit target follows a logic. Even if I in a losing position, if I theoretically, it is like if I short here with a stop loss at 114.50 and with a take profit at 113.50. It's perfectly acceptable this to happen. Will it happen? Who knows? But I am not saying, okay, I am increasing my stop loss and I want this to drop up to the 112 today, because that would be like completely, not impossible, but very difficult. Okay, so and Katerina, a question, the famous question that you know that I will ask. Okay, thanks. Well, yes, this is, let me open my binary option training contest report, because I want to show you why I decided to open a bearish trade in a seriously bullish market yesterday, anticipating that for 5 hours, if I'm not wrong, my binary options were 5 hours. It was going to be closed in profit. I'm going to check the exact entry time. Here it is. Wait a second. Okay, yeah. It is opening now. So, and just for the record, the trades are open. Apparently, dollar yen is stopping at this level and is wanting to at least try to retest the 114. Okay, let's see what happens. Okay, and let me have this screenshot. I need to download this again. Function report. This is one. This is second. I open it at 15 hour. So let me, okay. Just to close the webinar, I show you this because trading binary options, it's really hard because of this and other factors. But I really found a good trading opportunity since I was tracking that maybe we could face some kind of weakness. You see here that I opened 2 trades at 15 GMT time, pretty much the same time, to expire just at the ending of the day at 22 GMT time. Both were put options, meaning to the downside, and both were expired in profit. Here are the strike prices, 113.75. Let me mark it here. And you know what? I'm going just to to analyze the, this, because this is one of the most typical things that happen. Do you see that? Well, here it appears. My strike price was 113.766. I look at my expiration. 113.733. It was just 3 pip. Because it did go in the direction I predicted. But it barely was closed in profit. This is the same thing. 95.2, 94.9. This was barely in profit. Here is the, I'm going just to explain the dollar yen. This is the 5-minute chart. This is the time that I open it. Okay, here I open it here. And the expiration date was here. So you can see the difference was minimal. But why I did this? I was thinking of course, the risks of opening a put option with a duration of that in the strength of this current trend. It could be like very dangerous. Okay, but why I did it? Again, the 114. Look at the volume. As you can see, I just opened it after having this volume in the 5. Retesting highs at the 14, 114, and in the intraday 1 minute, the price action since here was showing me weakness to the downside, potential movements to the downside, So I said, you know what, I'm going to open it here, because if I don't open it here, the most likely thing is that the price could find some support at 113.50 and could bounce. And look, that's what it did. But okay, the thing is that this is more or less the way I will try to trade. In this case, I got lucky, even my direction was right. Of course, the bounce was really, really fast and really strong. But how this is how I will trade the only way I figure out how to trade binary options that expire at the end of the day. In this case was the psychological 114. And the previous price action and the volume spike, I said okay. Why? Because maybe this will be the top for the day. Maybe now we will have take profit. And that's what happened. But well, this could have been closed in loss. But the thing is that you need to have a criteria. For example, if you are trading in a trend, in order to open a binary option that will expire at the end of the day and the movement already passed before you open it, you need to track a pullback in order to buy and maybe have the remaining power to the upside. But usually what happens when you decide you have a strong movement to the upside and you say, okay, let's put a buy option here, the usual thing that happens is that the market could continue taking profits and then it stabilizes here. This happened because this is such a strong trend. But this is not the typical thing the market does. That is why I decided, among the other things that I just explained to you. So now the last picture. On my trading accounts. This is the 5 minutes. In a loss, 42 pip, 25. But the gappy is looking much better because of the price just retested this. Apparently it's trying to again look at the volumes are at their top. So yeah, we're having a lot of exchange of money here, money exchanging hands heavily, hopefully to the downside, but we need to wait and see. And this is how the dollar yen is looking. The market tried to make a pause here, but well, we need to wait and see. At least is respecting this. So what I will do next is to focus on the 5 and 1 minute chart, even the 10 seconds, to have way more in-depth view of what the market is doing. And if I see that this will continue moving up, I will wait for the next maybe pullback to these levels and just close my trade, revert it, and then head to the 114.50. This trade I would let it just to hit the hard stop loss, because even though we could have a movement here to the upside, if we have a massive movement to the downside in cable, this could actually drop to my take profit target just because of the pound movement. If I'm not wrong, today we're going to have important data by the UK. I will check it out. But this was the entry point was ideal, was 140. So yeah, I wouldn't be sad just to see my 140, 45 stop loss, 40 sorry, to be hit, because the entry was a good one, was a psychological level. In this case, it's not. That's why I am very worried what could happen afterwards. So it's time to call it a webinar. I hope you enjoyed the information here. Remember that all this that I shared to you is for overall to have a human dimension on trading. Usually traders tend to only show the good results when they triumph, when they win, but not when they lose. And of course how they lose, and of course how they manage the losses and the logic behind them. Usually traders, when they lose like for example, after having my second margin call in my account last month, of course I switched to the betting mode, to the casino mode. But in the meanwhile, when you have somebody that showed, or at least showed off a result like in January, it's important that you know how this person reacts when things don't go in his or her favor. To see if he really, a trader is how you manage adversity, challenges, not the abundance, not wealth, but what you do when you lose it, because it's when you tend to lose your mind badly. So, well, all the contests here, I honestly hope to perform at least at the end of the month, to perform decently, at least in one of them. But it would be super cool to have maybe two trades, two competitions in paid places. Even if it's the lowest place, I don't care. It's two competitions, so that would be at least a personal goal. And David, you don't have nothing to be thankful for. I really enjoy doing this, and hopefully this help people, help you, help others to generate their own financial decisions, and to help you in a case that you haven't gone to the profitable zone in trading, that this could help you all. So now it's time to say goodbye. Remember that I expect you all tomorrow at the same time. Thank you all the guests. Thank you, David. Thank you, Rocas. And thanks, of course, Katerina, for hosting, for recording, and for everything. Again, I expect you tomorrow, same time, same place. This is Alberto Alvarado. Remember to trade safe, be safe, and bye-bye.